Now we will revise chapter 5, which talks about the procedural compliance under GST. There are various topics covered under this chapter. The first topic is registration. So under GST, the registration, whenever I am liable to get registered, I have to get it. So, and the advantage of getting registration is I can claim the input tax credit of whatever taxes I have paid on my inward supply. And on my outward supply, whatever tax I am liable to pay, I can collect it from the recipient. And once I have applied for registration and I have got it, a 15-digit number will be allocated to me, which is called GST identification number. Under GST, the registration is PAN based and state specific. So if I am operating in number of states, for each and every state, I have to take different registration, but under my single PAN. Then whenever a GST identification number is allocated to me, along with the registration certificate, I have to disclose it in all my place of businesses, including principal as well as additional place of business, and also I have to disclose it on my display board. Then there is a single registration for GST under all the acts. I need not take a separate registration under separate act. Section 22 to 30 of CGST Act talks about registration. Each section what it talks about, I have given it here. We'll cover it one by one. First, section 22 talks about who is supposed to get registered. We call this as conditional registration. That is, if you are covered under this criteria, then you have to get registered. The first subsection 1 is very important. If the aggregate turnover of a person, if it is more than 10 lakh, if he is from Manipur, Mizoram, Nagaland, Tripura, in short MMNT, then they have to get registered. If you are from any other states and union territory, then for you the turnover limit applicable is 20 lakh. But if you are the exclusive supplier of goods within the state, then for you the limit applicable is 40 lakh. Only when your aggregate turnover all India basis, if it cross this limit, then you have to get registered. Then every person who on the date on which the GST is implemented, that is 1st July 2017, if he is already registered under the previous indirect tax regime, that is either VAT, CST or service tax, then automatically he has to get registered under GST. Subsection 3, where a business carried on by a taxable person, if it is sold for another person, then the transferee or the successor has to get the business registered, because he will be continuing to carry on the business which was already registered. But now he cannot continue with the same registration. The person who has sold the business has to cancel his registration, whereas the successor or transferee has to get a fresh registration. Whenever there is any amalgamation or demerger ordered by any court or tribunal, then in that case also the transferee or the successor has to get his business registered. This is all about section 22. Even section 24 also talks about who should get registered, but they are mandatory. So irrespective of your aggregate turnover limit, if you are covered under section 24, you have to take mandatory registration. So who are those people who are covered here? Persons making interstate taxable supply, that is outside the state, or casual taxable person, or the person who is required to pay tax under reverse charge mechanism, that is as a recipient. These three people have to take registration, but they have to be read with section 23, where certain exceptions are given. Then non-resident taxable person should always take the registration. Then the person who is supposed to collect tax under section 52 TCS, or the person who is supposed to deduct TDS has to get registration. Then if the e-commerce operator is liable to pay tax under section 9(5), then they are supposed to take registration. Then any supplier who is supplying the goods or services through e-commerce operator, where the e-commerce operator is supposed to collect TCS, they should also get registered. Who? Supplier. And e-commerce operator should anyway get registered, and your supplier also. Then input service distributor, then any person who is supplying online information and database access or retrieval services from outside India, but to an unregistered recipient in India. So supplier, even though he is outside India, he has to take registration in India. And if you are an agent who is supplying the goods on behalf of someone else, or broker or middleman, then for you registration is mandatory. Then coming to section 23, which tells in the following cases registration is not required. Means this is like exceptions for registration. Subsection 1 will tell the following persons shall not be liable to register. That is, any person engaged exclusively in supplying goods or services or both that are not liable to GST, that is on which I am the exclusive supplier of petrol or alcohol, on which GST is not at all applicable, or I am supplying something which is exempt under GST. So if I am the exclusive supplier of only that, then I need not get registered under GST irrespective of my turnover. Or if I am an agriculturist or farmer to the extent of supply of produce out of cultivation of land, in that case also irrespective of my turnover, I need not get registered. If I am supplying anything else other than the cultivation out of land, then I have to get registered based on my aggregate turnover, guys. Then coming to subsection 2, which is giving power to the government to notify any other categories which are exempt from registration. Using this power, the government has notified the following 3 cases. Person, that is the suppliers, whose outward supply is completely taxable under RCM, where recipient is liable to pay tax. In that case, recipient will take registration and pay the tax. Supplier need not get the registration. Second one is a person who is supplying the services outside the state, and if their turnover is within 20 lakh or 10 lakh limit as applicable, then they need not get registered. But if their turnover crosses 20 lakh or in case of MMNT 10 lakh, they have to get registered. Then a person supplying the goods outside the state, including casual taxable person, if that goods is notified handicraft goods or the goods made by the craftsman predominantly by hand, even though some machinery is used, even though those goods are sold outside the state, registration is not required provided the aggregate turnover is within 20 lakh or 10 lakh limit. If the aggregate turnover crosses 20 lakh or 10 lakh limit, yes, they have to get registered under GST. Then coming to the notification, section 22 subsection 1 gave the power to the government. In case of exclusive supplier of goods, the limit can be extended to 40 lakh. So using this power, the government has notified in case of exclusive supplier of goods within the state, the limit applicable is 40 lakh. But it is not applicable in the following cases. So whatever bullet point stands for, 40 lakh limit is not applicable for them. Who are those? If you are supplying the goods within the state, in the states of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Mizoram, Manipur, Nagaland, Tripura, Puducherry and Telangana. It is same 8 states which is covered in section 10 as special states, where 75 lakh limit would be applicable plus PT year, that is Puducherry and Telangana. Then persons required to take compulsory registration under section 24. For them also 40 lakh limit is not applicable. For them no limit is applicable, guys. Okay. Then coming to suppliers of ITPBT, that is ice cream, tobacco, pan masala, bricks and tiles. Then whether irrespective of your aggregate turnover, for you 40 lakh limit is not applicable. So you have to take registration when your turnover crosses 20 lakh or 10 lakh as the case may be. Then person taking voluntary registration, even though your turnover is not crossed, you are taking registration. For you, turnover is not at all applicable. Yes. So just to summarize all these limits, it is given here table. Threshold limit for registration for exclusive supplier of goods within the state. What is the limit? For MMNT, 10 lakh. For remaining 6 states, out of this 10 states, for remaining 6 states, it is 20 lakh. Whereas for all other states and union territory, it is 40 lakh for exclusive supplier of goods. Then for the supplier of only services or ITPBT or goods along with services, whether within the state or outside the state. And if it is outside the state for goods, it is mandatory registration. Whereas if it is outside the state for services, 20 lakh or 10 lakh limit will be applicable. Okay. So in case of MMNT, the limit applicable is 10 lakh. Whereas in any other case, that is in any other states or union territory, it is 20 lakh. Then coming to, once I got to know that I am supposed to get registered, section 25 talks about procedure for registration. Once I am liable for registration, within 30 days from the date I am liable for registration, I have to apply for registration in REG 01. And once I have made an application in REG 1, within 7 days, the proper officer will have 2 options. I have matched the colors here. So application will be either accepted and registration certificate will be granted in REG 6, or else he will issue a show-cause notice to me asking for more information or details in REG 3. Once show-cause notice is issued by the proper officer to the applicant, he has to reply for it within 7 days. And in what form? REG 4. And once reply is given within 7 days, the proper officer will again have 2 options. Either accept the application or reject the application. If he is rejecting the application, he will reject it in REG 5. And if he is granting the registration, he will grant the registration certificate in REG 6. I have marked the colors here. Hope you guys can understand that. Next, casual taxable person and non-resident taxable person have to apply for registration 5 days prior to commencement of business. Then if the proper officer is silent within the time given to him, then at the end of 7 days, it is understood or implied that registration is approved or granted. Then PAN is must for getting registration under GST except for NRTP. Then registration need to be taken state-wise. So wherever I am having the business, if my all India turnover basis, that is PAN based, if my aggregate turnover crosses the limits, I have to take the registration in all the states wherever I am operating. And every single state should have at least 1 registration. But if I want, I can take a separate registration for each state. In that case, each registration, whether it is within the state or outside the state, will be treated as distinct person. But if I am having two different units in the same state, one is in SEZ and another is outside the SEZ, I have to take two separate registration. Means for SEZ, irrespective of the location, even though it is within India, we will treat it as outside India, and separate registration has to be taken for it. And in that case also, we will treat it as distinct person. Next, what is the effective date of registration? Rule 10. Once I am liable for registration, if I have made an application for registration in REG 1 within 30 days, then my effective date of registration will be the date on which I was liable for registration. If I have made an application for registration after 30 days, then the effective date of registration will be the actual date of grant of registration. Then rule 10A is telling, actually bank account details has to be given while making the application for registration. If by chance, if I had not opened a bank account at the time of making an application for registration, then I can take the registration granted. But once registration certificate is granted to me, at least 45 days from there or within the due date of filing the first return under section 39, I have to give the bank account details, or else my registration is liable to be cancelled by the proper officer. Then coming to deemed registration under section 26. Whenever I have taken the registration under any respective SGST or UTGST Act, it is deemed registration under CGST Act. Or my application, if it is rejected under any SGST Act or UTGST Act, then it is deemed rejection even under CGST Act. Then coming to section 27, which talks about the CTP and NRTP, that is casual taxable person and non-resident taxable person. Casual taxable person is defined in section 2 clause 20, which tells casual taxable person is a person who occasionally undertakes the transaction involving supply of goods or services or both in the course or furtherance of business, where whether as a principal or agent or in any other capacity in a state or union territory where he has no fixed place of business. In simple, casual taxable person is a person who is carrying on regularly the business in a particular state where he has already taken the registration, but now is going to some other state for a temporary duration to carry on the business for a temporary period. So for that temporary period, he can take the registration as CTP in that particular state. And he will make an application for registration in REG 1 5 days prior to commencement of business, and he will file GSTR 1 during which for his registration is granted, for a registration period granted for him. Then coming to non-resident taxable person, it has been defined in section 2 clause 77, which defines non-resident taxable person as a person who occasionally undertakes transactions, same as CTP, involving supply of goods or services or both, whether as principal or agent or in any other capacity, but who has no fixed place of business or resident in India. In simple, he is a person who is having some business outside India, no connection with India, no office here, no branch, nothing, but he is coming to India only for a temporary period to do some business. In that case, in India, for whatever period is coming in the respective state, he has to take the registration as non-resident taxable person, and he has to make application for registration in REG 9 5 days prior to commencement of business, and he has to file GSTR 5 during his registration period, that is the return. Then coming back to section 27, section 27 is telling the registration will be granted to casual taxable person or non-resident taxable person for a maximum of 90 days. If they are asking for less than that, then registration will be granted only for that much or maximum 90 days, and which can be further extended by another 90 days maximum. But for extension, GSTR 11 has to be filed by them. Then CTP and NRTP shall make an advance deposit of tax while at the time of making the application. So they have to estimate their tax liability for the period for which they are seeking the registration, and they have to deposit the tax in advance. So if there is any short or excess, later it will be adjusted. Then CTP and NRTP shall make taxable supply only after the registration certificate is issued to them. Yes, this is all about 27. Then coming to the summary of forms. So we have discussed till 6. I have already discussed it along with that timeline. Then coming to 7, the person who is supposed to take registration as a deductor of tax or collector of tax has to make the application in REG 7, and if there is any cancellation of registration, it will be communicated to them in REG 8. Then NRTP we already discussed, they have to make an application in REG 9, whereas CTP will make an application in REG 1 only. I mentioned it, including CTP. Okay, and for them time limit is 5 days prior to commencement of business, whereas for others it is 30 days from the date on which they are liable. Okay. Then coming to 10, a person supplying online information and database access or retrieval services from outside India to an unregistered recipient. For them also registration is mandatory. They have to make an application in REG 10. And CTP and NRTP, once registration is granted for them, if they are asking for extension, they have to make an application in REG 11, both CTP as well as NRTP. Next, coming to the next topic, tax invoices, debit and credit note. So invoice, debit and credit notes are the various documents which has to be issued under different circumstances, normally by the supplier to the recipients. So what are the documents, who will issue to whom and when? We will see. Tax invoice is a document which is to be issued by the supplier to the recipient, but in case where RCM is applicable, supplier is unregistered and recipient is registered. In that case, recipient will issue payment voucher as well as invoice to the supplier. Whereas in all other cases, supplier will issue the invoice to the recipient for all the supplies he has made to the recipient. Then consolidated tax invoice will be issued by the supplier if all three conditions are satisfied. That is, value of supply is less than 200, recipient is unregistered, and he doesn't require separate tax invoice. In that case, at the end of each day, whatever supply has been made by the supplier to the unregistered recipient, he can issue one consolidated tax invoice. This is when value of goods supplied is less than 200 and number of times it is supplied in the same day. Instead of issuing separate invoice for each supply, you can issue one consolidated tax invoice. Next, coming to revised tax invoice. If the person has applied for registration within 30 days from the date he is liable, the effective date of registration will be the date on which he was liable for registration. So for the time period of effective date of registration till the date of grant of registration, whatever supplies he has made, he has to find that recipients, issue revised tax invoice, and he can collect the tax from the recipients and pay it to the government. And within what time this revised tax invoice has to be issued is within 1 month from the date of grant of registration. This is only for the supplies which took place between effective date of registration till the date of grant of registration. After the date of grant of registration, any supply I make, I will be issuing tax invoice. Next document, bill of supply. Two suppliers have to issue bill of supply instead of tax invoice. That is the persons whose outward supply is exempt or the composition supplier, both the composition scheme. Next, delivery challan. Whenever the goods are moving from one place to another place, but there is no supply. That is, if I am sending the goods to job worker place to do some job work, or I don't know the quantity when I am removing the goods in my place. I would be knowing the quantity only when it is delivered to the recipient place. In that case, the goods can move from one place to another place only along with delivery challan. But later, if there is a supply, then supplier has to issue tax invoice to the recipient. Then coming to e-way bill. E-way bill has to be generated either by the supplier or recipient or transporter whenever the movement of goods is there from one place to another place. And the consignment value is more than 50,000, including GST. Including GST, if the consignment value is more than 50,000, e-way bill has to be generated. If it is less than 50,000, voluntary, guys. Then coming to payment voucher, the recipient, whenever he is making any payment under RCM, he will issue payment voucher to the supplier. And if the supplier is unregistered, in that case, recipient will also issue a tax invoice to the supplier. Then coming to receipt voucher, if supplier has received any advance, for the supply he will make in future, either goods or services. So when he receives the advance, he has to give something called as receipt voucher to the recipient telling, I have received an advance of so much as on so and so date. Then once advance is received, in future if there is any supply, when there is a supply, invoice will be issued. Sir, advance is received by the supplier, but he didn't supply anything, he didn't issue invoice. In that case, he has to give back the advance or refund the advance. At that time, he will issue one document called refund voucher. This is only when advance was received, no supply, no invoice, but when I am giving back the money, refund voucher will be issued by the supplier to the recipient. Then coming to credit note, which will be issued by the supplier to the recipient. When? In what all situation? Whenever taxable value in the invoice, which I have charged already, is more than what I was actually supposed to charge, or I have collected excess tax. More than what I am supposed to collect, I have already collected. Or if there is a sales returns, or if there is any post-supply discount. That is, I have supplied the goods already, so discount was not given at the time of supply, but later I have given it. So in that case, for whatever discount I have given after the supply, we have to issue a credit note. And why? Because the recipient account will be credited in the books of accounts of the supplier. So that is why we are supposed to issue credit note in that scenarios. Then coming to declaration, whenever a credit note is issued in that particular month with respect to some past supply. So in that case, whenever I am issuing the credit note, for that particular month, what return I will file, I have to disclose the details of credit note in that month. But still I can disclose it in later also, but not later than 30th November of next financial year or actual date of filing the annual return, whichever is earlier. Okay, some extended time is given to disclose the details of credit note. Then coming to debit note, which is covered under section 34 subsection 3, which is issued again by the supplier to the recipient, but in a reverse scenario. That is, whenever I have already charged less, I was supposed to charge more, but I have charged less. Or I was supposed to charge more GST, but I have collected less. In that case, a debit note will be issued by the supplier to the recipient, because in the books of supplier, the recipient account is supposed to be debited for that short amount. So in that case, the debit note will be issued by the supplier to recipient. And whenever the supplier has issued a debit note to the government, to the recipient, there will be an increase in tax liability for him. So the debit note details has to be disclosed in the month in which he has issued it to the recipient, and accordingly his tax liability has to be adjusted upwards. Then coming to invoicing. Invoicing means where the supplier is supposed to issue the invoice to the recipient electronically only. When is it? Whenever the aggregate turnover in any year of the supplier is more than 10 crore. With respect to B2B supply, that is business to business, the supplier has to issue the invoice in electronic form. And in any year, from 17-18, that is the year in which GST was implemented, in any year if the aggregate turnover is more than 10 crore, the supplier has to issue invoice in case of B2B supplies. So invoice, credit note and debit note when issued by the notified person, that is to a registered person in case of B2B supply or for the purpose of exports, are covered under e-invoice. But presently such notified persons are not required to report B2C invoices. That is, if the recipient is unregistered. Further, e-invoicing is also not applicable to the invoices issued by input service distributor and in case of import of goods. Then coming to applicability of dynamic QR code. So the supplier has to display his dynamic QR code in the invoice issued to the unregistered recipients, provided his aggregate turnover in any year is more than 500 crore. If his aggregate turnover in any year is more than 500 crore, in the invoice which is issuing to the unregistered recipient, he has to disclose the QR code, which will enable the recipient to make the payments through scanning it. Then coming to the next topic, accounts and records, which is covered in section 35 and 36 of CGST Act. Section 35, accounts and other records. Section 35 states that every registered person shall maintain proper books of accounts at his principal place of business, and if he is having more branches, then in each place for that business, whatever is the books of accounts, he will be maintaining it. And how long he has to retain that books of accounts? Whatever books of accounts are there, he has to maintain it for 72 months from the due date of furnishing the annual return for the year for which the books of accounts relate to. Okay. For example, if the books of accounts is related to financial year 2021, due date to file annual return for 2021 is 31st December 21. So from here for another 72 months, it has to be maintained. However, a registered person who is a party to any appeal or revision, then once the final order is passed, from the date on which final order is passed, he has to maintain the books of accounts for another 1 year. Then coming to returns. Return is a document which every registered person has to file with the department, giving the details of his supplies, tax paid. So there are various returns to be filed by different persons under different circumstances under GST. What are those? GSTR 1 has to be filed by every registered person, that is who is paying tax under section 9, giving the details of his outward supply with on or before 11th of next month. Then GSTR 3B, whoever is filing 1 should also file 3B, simple return giving the details of outward supply, inward supply, input tax credit availed, as well as the tax paid through electronic cash ledger. And it has to be filed on or before 20th of next month. And for them, there is some concept called QRMP scheme also, where they will file the tax quarterly but pay the tax monthly. Okay, and nothing much about that is covered in your syllabus, guys. Then coming to GSTR 4, which has to be filed by, it is an annual return which has to be filed by the person who is opted for composition scheme, and it is annual return which has to be filed on or before 30th April. Along with this, one more annual return they have to file, that is GSTR 9A, on or before 31st December of next financial year. But the information to be given in 9A is more detailed. Then coming to 5, non-resident taxable person has to file GSTR 5 on or before 20th of next month. Then coming to GSTR 6, return for input service distributor, they have to file it on or before 13th of next month. Then GSTR 9, whoever is filing 1 and 3B, that is every month or every quarterly, if they are opted for QRMP, they should also file annual return on or before 31st December of next financial year, guys. Then coming to payments, whenever a person is registered under GST, on his GST profile, he will be allowed to maintain 3 electronic ledger, that is cash ledger, credit ledger and liability ledger. Whenever there is a delay in payment of tax by a registered person, 18% interest would be charged on that tax amount for the delay. If there is excess claim of input tax credit, or if there is excess reduction of output tax liability, then they have to charge how much interest? 24% interest per annum. Then coming to the ledgers, electronic liability ledger has to be maintained in GST PMT01 format. Any amount which the person is liable to pay under GST will be debited here, and how he pay it will be credited. That is, if he is using electronic credit ledger balance, then that account will be credited, or else electronic cash ledger if he is paying the amount through electronic cash ledger. Then coming to credit ledger, whatever input tax the person has paid on his inward supply on which he is eligible to take input tax credit will be credited here, and when he uses it to pay his output tax, it will be debited in the electronic credit ledger. And if there is any excess credit which I have not utilized, then I can claim the refund of the same only in 2 scenarios. That is, when my outward supply is 0 rated and I have not paid tax on it. So in that case, I can claim a refund of unutilized ITC, or if I am covered under inverted duty structure, that is, the tax on my inward supply is more than the tax on my outward supply. In that case, when I have made an application for refund, immediately the amount will be debited. If it is processed, no problem. If it is rejected, the amount has to be recredited back. And whatever balance is there in electronic credit ledger can be utilized only to make payment towards output tax. If I am liable to pay anything in the form of interest, late fee, penalty, or if I am liable to pay tax under RCM on my inward supply, I have to pay it through cash ledger only. Then coming to utilization of this credit, how to utilize the credit. The utilization pattern is given in section 49, read with certain rules. So always first IGST credit has to be utilized against IGST liability. Then the remaining IGST credit can be utilized against CGST or SGST in any order, in any proportion. So once IGST credit is fully utilized, only then we can go and touch CGST credit. CGST credit will be first utilized against CGST liability. If still something is pending, then it will be adjusted against IGST liability. Then coming to SGST or UTGST credit, first it will be adjusted against the same category liability. If still something is pending, I will adjust it against IGST liability. No cross utilization against CGST and SGST is possible. Then coming to electronic cash ledger, which is maintained in PMT05. Whenever the amount is deposited into the cash ledger, which is in any of this form, that is e-payment through internet banking, credit card, debit card, or NEFT, RTGS, or over the counter, but up to 10,000 per challan per tax period can be maximum deposited over the counter. So when you have deposited the amount, by generating the challan, the amount will be credited to cash ledger, and when you are actually utilizing it to pay anything under GST, the amount would be debited. And if you are claimed for any refund of unutilized ITC, then that amount will be, if it is processed, it will be credited to cash ledger. If it is rejected, redebit it to the cash ledger. Same way, if I have unutilized balance in electronic cash ledger, normally we will carry forward it, but if I want, I can claim a refund of it. If I applied for refund, then immediately that amount would be debited here, and if a refund is processed, that amount will be credited to my actual bank account. If it is rejected, we will recredit it back. We will recredit it to cash ledger. Okay. And the order of payment will always be first clear all your dues for the previous tax periods, then for the current tax period. Then if I am liable to pay something but not paid, then the department will recover it from me, which is like a last option. And once I have deposited the amount into the cash ledger under a particular head, I cannot utilize it to make the payment against some other head, guys. Then coming to the summary of various forms, I have given you PMT 1, 2, 3, 4, 5 and 6 in the order. Then coming to the refunds, whenever I am eligible for any refund, I have to make an application for refund, requesting for refund in RFT 01 within a period of 2 years from the end of relevant date. And what is that relevant date? Depends on the situations. If there is any balance in the electronic cash ledger or credit ledger, I can apply for refund through application at any time while I am filing the return under section 39. So refund of unutilized input tax credit can be claimed under two situations. That is when my outward supply is zero rated, on which I am not paying any tax, or else the tax on my inward supply is more than the tax on my outward supply, which we call it as inverted duty structure. But in the following cases, you cannot claim the refund of unutilized ITC, which is on my export. If I am liable to pay export duty, I cannot claim. Then if I have claimed any duty drawback of central tax or IGST, then application for refund has to be made in RFT 01. And once the application is made, the proper officer has to take a decision, either reject or pass the refund order within 60 days in RFD 06. If I am eligible for refund, then the amount will be granted to me. If not, if refund is rejected, then the amount will be credited to Consumer Welfare Fund. So if there is any delay in payment of the refund in excess of 60 days, refund has to be granted within 60 days from the date I have made the application. If it is extended further from 61st day, interest will be accumulated on the refund amount at 6% per annum. But if I have made an application based on the court judgment or tribunal judgment, so in that case, on the expiry of 60 days, that is from 61st day, interest will be calculated not at 6% but at 9%. Then coming to audit, under GST there are two types of audit. First is general audit. Section 65 states the commissioner or any officer who is authorized by the commissioner by way of general or special order may undertake, they themselves will undertake the audit of a registered person, but they have to give 15 days prior notice to the registered person that they are willing to conduct the audit of their books of accounts, so that he will keep it ready. Once the audit is started, it has to be completed within 3 months, and which can be further extended for another 6 months. So totally 3 plus 6, 9 months, including extension. And once the audit is completed, within 30 days of completion of the audit, the department or the commissioner has to give the details of what did they find during the audit to the registered person. Then coming to special audit under section 66. Section 66 states that where any officer not below the rank of assistant commissioner, having regard to complexity of the case or in the interest of revenue, is of the opinion that liability has not been disclosed properly or the person has claimed excess credit. So with the previous approval of commissioner, he can nominate a chartered accountant or cost accountant to conduct the audit of books of accounts of the registered person. So the chartered accountant or cost accountant who is nominated by the commissioner or the person so authorized by him shall conduct the audit and submit the audit report to the commissioner within 90 days from the date of commencement of audits, which can be extended for another 90 days. So totally including extension, it is 180 days. So this is all about revision of chapter 5, guys.